Is the crypto bull run officially over? For months, we've been riding high, but a single name just sent a shockwave through the market: Kevin Warsh. With his nomination to lead the Fed, Bitcoin and Ether have just hit their longest losing streaks since 2019. This isn't just a dip, it's the Warsh Effect. Today, we're going inside the Fed's new plan for 2026 to see if your portfolio is about to get mauled or if this is the ultimate trap for the bears. Look, I know it hurts. Seeing Bitcoin slide from nearly 90K down toward 75K in just a matter of days feels like a betrayal. But to survive this, you have to understand the why. For my technical analysis fans, the chart is screaming. We just broke below the neckline of a massive head and shoulders pattern. In plain English, the momentum has shifted. The market is pricing in a very different Federal Reserve than the one we had under Powell. Warsh is known as a monetary hawk. While the previous administration pushed for easy money and lower rates, Warsh has a history of favoring monetary discipline. The market hears his name and thinks one thing: the era of cheap money is over. Think of liquidity like the water in a swimming pool. For years, the Fed has been pumping water in, allowing crypto and tech stocks to float effortlessly to the moon. Warsh just walked over to the drain and started turning the handle. When the dollar gets stronger, and it's currently at a yearly high, risk assets like Bitcoin almost always get weaker. It's the reverse Robin Hood effect. The Fed is taking from the risk takers to protect the value of the dollar. So, where is the bottom? Right now, we are testing the $74,500 to $75,000 range. This is the floor of truth. If we hold here, it's just a healthy correction. But if we break, experts are warning that the next stop could be a retest of the 70,000 or even 65,000 zone. This is the bear cave scenario. In a Warsh-led Fed, we might see the balance sheet shrink faster than expected. Less money in the system means less speculative juice for altcoins. This is why Ethereum has dropped even harder than Bitcoin, down 23% this year already. But here is the motivational part. Don't panic sell the bottom. History tells us that Bitcoin is a truth teller. Warsh himself once said that Bitcoin's rise is a derivative of the dollar flood. If he tightens too hard and the economy starts to crack, Bitcoin's role as a hedge against institutional failure actually becomes stronger. We are in a transition phase. The dumb money is exiting because they're scared of a hawk. The smart money is watching that 74K level like a hawk. Practical takeaway for today: watch the neckline. Until Bitcoin reclaims $82,000, the bears have control of the narrative. Focus on quality. In high-rate environments, trash coins go to zero. Bitcoin and Ether are the only ones with the institutional muscle to survive a Warsh tightening cycle. Patience is a position. You don't have to do something every day. Sometimes the best move is just standing still while the storm passes. Are you buying this Warsh dip or waiting for 70K? Tell me your move in the comments. Subscribe for simpler 2026 finance stories. Stay smart, stay calm.